So what do you guys think of this, though? I mean, do you think 2026, and by the way, not just housing, but also commercial assets, investment assets, like where's this thing going? Are we facing a crash, or do you feel like we're going to,
Well, the headline says, will the market crash get worse? Well, maybe I missed the memo. I didn't know there was a crash. I didn't know there was a crash happening.
There's no crash happening. And, there's some price adjustment, rate adjustment, but like if there's a crash coming, fucking bring it. Like I know when, I started buying property, I mean, I bought in 05, 6, 7, but it was 2009. It was after 2008 that there was a lot of opportunities, right? That's where I put together all that initial no money down seller financing. So a crash, bring it. If you're a real estate investor and you're ready, it doesn't matter if the market's up, down, sideways, whatever. There's opportunities in every fucking market. And in a down market, I think there's even more opportunities. That said, I don't think there's a crash. I think we're slowly correcting to where things probably would have been if we didn't have this low interest rate, easy money environment.
Yeah, I don't think there's a crash either. I think that the most concern I've had is in the commercial world with interest rates and people buying too frothy during the run up and not building in sort of a delta between their cap rate and their interest rate and what that does. However, even that looks like a soft landing. Yeah, there's people that are getting hosed. They got to give their properties back to the bank, whatever. But the bank goes and sells it. There's still a market to go to for buyers, and I don't think that that's going to crash the market. On the single family side, there's a lot of buyers on the bench. Buyers are so funny because they're so concerned about interest rates, but even when prices go down in some markets, they're still like, yeah, but interest rates are too high. So they'd rather wait for interest rates to drop to 5 or 4% and then go buy at a higher price. When in my opinion, man, the way you win is you go buy a good home or a good commercial asset, depending on if you're investing or you're buying for your family. You buy it at a high interest rate, but a good price. And when interest rates go down, you go refi. And you have more equity. So it's like, I feel like people are playing the game wrong.
Well, the fundamentals in 2008, everybody's got this like 2008 Great Recession thing. The fundamentals that led to the housing crash then are completely different, right? I mean, and it was really the lending environment. I mean, they would lend money to anybody. And I think that there has been a lot more prudence in appraisals, like appraisers on how many appraisers were on the take? Sorry for those appraisers that are listening that were on the take, but how many appraisers were on the take? We're just giving the value that it was supposed to be. They're giving loans to people with no income. That also has the same effect as basically free money over the last decade. When you have free money, it's going to drive prices up. When you inject that much capital into the economy, it's going to drive prices up. So the question is, first of all, there's no crash, but I guess the second question is, are we going to have a crash? Is there going to be this sort of like, we've been talking about in past episodes, like a glut of houses coming on the market, which again affects commercial assets like apartment buildings and mobile home parks and things that we own, because housing is housing. And if you've got an oversupply, and then that's going to drive prices down on everything across the board, because if there's an oversupply of houses, it's going to drive prices down. People are going to buy those houses. They're not going to rent, which is going to drive rents down, which is going to drive commercial assets down. Do we see this happening?
You know what I think is crazy is, and I'll answer your question. Yeah, it's happening. Like prices change all the time. Interest rates change. They adjust. I see more people talking about interest rates and the price of houses, that they're the price of homes, price of real estate, that don't invest in real estate. They're talking about interest rates going up, going down, but they actually don't own any fucking real estate. And so as an investor, there's opportunities in a high interest rate environment, low interest rate environment. I love what Mitch said, going back to, post 2008, 2009, 10, 11, 12, everybody was so fearful. And that's when I jumped in, right? Now I had nothing to lose then, but I bought on great terms. That was all those no money down seller finance deals. And to Mitch's point, I then refinanced those in 2014 when prices were back up, interest rates were lower, and it was an environment to refinance in a long-term fixed debt. And so I'd actually rather buy in a down market with higher interest rates and create a financing and then refinance in a long-term debt as the market shifts.
But that's how you can get a great deal, and you can play the market. You can play the interest rate market. Of course, we don't know the total timing and when things happen, but you buy in a historically high interest rate environment at good price, and you refinance because you're holding that over time. That's how you win. If you overpay or you pay a ton during low interest rates, you don't have that same lever. So I think it's
what's this low interest rate? Like I keep going back to this, and this is, I know.
Well, low interest rate in the short term.
Well, but I'm also like, I'm reading this.
The Cold Cold War era,
Right,
like
but
you're talking about.
yeah, thanks. But this data says 6 to 7%. Like that's
Yeah.
again, my first house was in the eights.
No, I know.
So
I
it's
know. And
actually just
historically,
coming
I
back
don't.
down to that. If people want to see 2% interest rates again, I don't think you're ever going to see that again. I think we've learned our lesson. I think like that's ridiculous. But like in the 4s, 5s, like that's just steady Eddie. That's normal.
Yeah, and I think we're spoiled though. This entire last generation's watched interest rates at a very, very low rate. So
Right.
relative to their lifetimes right now, in the 6s seems obnoxious, or the 8s, or whatever it was before.
But those aren't high.
So I
These are
think
like
people are
average. These
Right.
are hovering around average interest
for
rates,
history.
and so
Yep.
yeah, and so again, going back to Mitch's point, like I think it's spot on. Like I bought my first 4 mobile home parks. I used hard money. Right. I used hard money, and then one was seller financing. And then I took advantage of the opportunity when interest rates got lower. I then refinanced into that.
They worked at higher interest rates.
They worked at a higher rate. So if they worked at 8.25%, imagine how they looked at 4.125%. The interest rate got cut in half. I actually pulled tax-free cash out, kept the asset, and had liquidity to go deploy into other deals. So it's time in the market gives you the opportunity to take advantage of when the market shifts. So when prices are up, maybe it's a time to refi and sell. When interest rates are low, maybe it's a time to refinance, pull cash out. But you gotta be in the market. Again, a lot of the people that I hear talking about interest rates and home prices and values and all these things, like don't even invest in real estate, where maybe they own one property, but a lot of times they don't own anything, and it actually doesn't come at all.
Well, we see that people are like, I'm just waiting. I'm waiting. And then they're going to wait forever, because then when rates come down, I think prices are going to start going back up, and then they're going to wait for prices to come back down again. Everybody, if you're a waiter, you're always going to wait. If you take action, you're going to just understand the fundamentals, plug into a community, understand what you're doing, and make solid moves. To your point, Gabe, you could buy on double-digit % interest rates. If the property works, then you get the double benefit of interest rates going down, the double benefit being lower debt service, which is higher cash flow, but also your cap rates compress in commercial assets, which is inversely proportional to the value. So now you got an asset that's worth more, that's producing higher cash flow. So if you buy it on sound fundamentals now, you're going to be in good shape. But I don't want people listening to this to think, okay, well, I'm gonna buy in double-digit interest rates or 9 or 10% interest rates, and I'm gonna feed this thing. This asset's gonna bleed until interest rates come down. No, you got to buy, and it's got to work. It's got to work at the price, the terms, interest rate, the debt structure, at the time of purchase. And then also, don't forget, buy right, buy smart. Don't overpay either. I mean, a lot of people say you make your money when you buy, and I do really agree with that.
Well, I think the other thing too is if I had to just sort of predict or try to predict, I think we're in a time of consolidation where prices are sort of like flat, right? I mean, we're seeing that. We've seen some prices go down in certain markets. In certain markets, they're going up. But overall, it's a bit choppy, and that's evidence to consolidation. In other words, the market's already been tested. We've already had a period of high interest rates. We've had a period of challenges in the commercial market with high interest rates and people buying too frothy. The market's been tested, and I think if it was going to crash, it would have crashed already. So it's this choppy consolidation. But during that consolidation, builders are not building, people are not adding supply, and the buyer bench is growing. So for me, if I were just like to predict this, it's going to be up and to the right from 2012 to 2023, somewhere in there. And then it gets choppy for a couple years. But because supply's fallen off and demand has grown and they're waiting for interest rates, if we see a tick down, say in September, say 25 basis points in September, I think you could see us go into another bull market very, very quickly. I do not see a market crash. I actually see some big growth this fall, potentially, if not into next year, as rates adjust. I think people are so hyper focused on rates that they let the price adjust around that, and they don't really care about price. Like if right now you said, hey, you can get the same home for $100,000 more, but we'll give you 4% interest, you're gonna have a lot of buyers because they're rate sensitive versus price sensitive.
Well, that's exactly what happened in 2020, 21, and early 22. That's exactly what happened. People had buying power because interest rates were down, and they overpaid because interest rates were low. So they had more buying power to buy more property, a higher price point. Competition was high because everybody had access to this money. But Mitch, I have to ask, you think a quarter point is enough of an adjustment? If rates adjust a quarter point, you think that's enough to actually have a bull market in the real estate arena?
I don't know if a quarter is enough. I think that it could push us that direction though. I think that we
I think
could
it's
see,
psychological. People they want it so
Yeah.
badly. Once
Yeah.
I mean, the feds, again, I keep saying this,
Yeah.
feds don't really affect residential mortgage rates directly. It's the treasuries. But when people start seeing those rates come down, I think they start talking themselves into the emotional buy. If they've been wanting to buy, they're going to do it.
I think it definitely secures us to not have a downturn or a market crash. I think that it definitely pushes us from a consolidation phase to maybe a light bull market. But I think that it could change things. Then on the commercial side, which is the world we're in, we buy mobile home parks, we buy industrial buildings, triple net buildings, apartment buildings. I think that lower interest rates has the same-ish effect, right? It's going to drive buyers into the market. More people are going to jump in. Our values actually increase during that time. Our cash flow goes up potentially if we refinance. So we can play, and we talked about this in the last video, we could play future events or events that happen, I guess, in the past, the best we can to increase our cash flow, to increase our wealth. And we can do that because we hold assets as long as we can, long term.
There's all of these, we've been talking about this market crash, and obviously people are like, well, single family homes. It is. It's I keep saying this, it's inventory. But we've been talking about different puts and takes on what's a crash really. It's the rapid devaluation of values of homes, right? I live in a house that I thought was worth $1 million. Now it's worth $700,000. It goes down 30%. So, but we've been talking about these puts and takes. Some of that is, okay, there's going to be all these homes that get released on the market from people, the baby boomers retiring, or these investors are going to start exiting all these houses they've been buying up, these large institutional investors. But then you're talking about, well, we've been subduing building because of interest rates, and we were behind going into 2008. So we're going to have an increased demand and supply is not going to keep up. And then you've got other puts and takes of maybe our population isn't growing as fast as it used to be. I mean, it's like I could sit here and argue both sides for devaluation or increased valuations of homes. So where do we think this plays out?
Well, I mean, I gave my opinion. I think that we're in a period of consolidation, and buyers and sellers are trading properties, and in different markets, it's performing differently. We've seen some adjustments in some markets that are oversupply. Other markets are still growing. A lot of these smaller towns and nice areas are still growing with, people want to be there. So, I mean, what's tough is there's no national real estate market. Yeah, you can take everything together and sort of average it, but the fact is there's multiple markets. I think though that, like you said before, this market's based on different fundamentals than 2008. 2008, they were handing out. I mean, I had a cousin who had 2 loans on homes, and he worked at the gas station. Okay. So there was no fundamentals in 2008. It was built on a house of cards. And because of that, it all fell down. I don't think that that's the case today. I mean, you go in for a residential loan, you're getting a caveat check. In fact, commercial loan is pretty tough. We've done some commercial loans just lately, and they're treating them, they almost feel like residential loans. I mean, it's a full body search. And so I think that the market's built on strong fundamentals. Builders have gone home, and not just single family, by the way. Builders, there's a lot less cranes in the air for multifamily. On the mobile home park, they're not making any more of those. I mean, that's been like that for years. So I think we have a supply issue. In the short term, there's going to be some vacancies here and there, some trouble here and there, but I think that we could see growth in the market just like we saw maybe coming out of 2012. I think we could see huge growth in the market. The other thing too is and we've alluded to this in past videos, the dollar is depreciating. It's always depreciating. Even when inflation goes down, it's just depreciating at a lower, slower rate. So if it's 8%, it's depreciating by 8%. If it's 3%, it's depreciating by 3%, which means the dollar buys less every single year. And stores of value like land, like hard assets, property, I shouldn't say land because I want cash flow properties, but cash flow properties specifically protect us. And the rich and the wealthy know that's the case. And so I just don't see this thing barreling over and going into crash.
But even if it does, I think it creates one of the biggest buying opportunities ever. And I take that from I think about 2009, 10, 11, 12, 13, when I started really, really ramping up my buying. And so many people on the sidelines were saying, well, what if prices go down? What if prices go down? And I remember thinking I literally don't care because I was investing for cash flow. My focus was cash flow first. And I remember telling everybody and all the people that were skeptical, most of them were not real estate investors, or they were flippers, right? They were worried about, well, what if prices go down? What if you can't sell? And go, I'm not selling properties. I'm buying for cash flow. And you know what happened from 2009 through 13? Maybe the value of the properties went up and down a little bit on paper. My cash flow stayed the same. And it actually went up year after year. There was less buyers in the market and more renters. So my cash flow stayed the same because I bought on fundamentals and I bought for cash flow, not on appreciation. Now, fast forward 10, 15 years later, appreciation happened. That equity, the equity happened because I held the properties, but it was the cash flow that is what allowed me to hold those properties that long. And I think that's the piece that people forget. Everyone focuses on price. And I think terms are more important. I think how you purchase the property and when you purchase the property makes a big difference. And if you're only focused on price, that's not the whole story. That's a very small piece of the puzzle.
Yeah, and I asked the question rhetorically. I do, but going back to I think people sometimes want to overcomplicate things. It comes down to supply and demand. And again, I'm going to get to your point here in a second, Gabe, because I do agree with that. At the end of the day, buy on solid fundamentals, have high cash flow. I do agree with you, Mitch. I do believe that values on residential assets, whether they're single family houses or apartment complexes, are going to go up. We've definitely seen multifamily dip considerably. That's because the market is adjusting for people doing dumb shit things on the run up. Again, these syndicators that were out raising way too much capital, overpaying for stuff, underwriting interest rates that were going to be in the 3 and 4% forever. But at the end of the day, I think sometimes it's easy to complicate things. And we have supply that is not going to keep up with demand for housing. People need to live somewhere. I don't care if you're plugged into the matrix, you took the red pill, right? You still need you need a roof over your head. And we do, and now a lot of experts that we talk to, people that we trust considerably, are saying all this absorption will happen probably within the next 12 months, whether it's single family, multifamily, and then, yeah, you're going to see rents increase. You're going to see values increase. I think you're going to see single family homes increase. If you are a person that understands the single family house market and wants to buy single family house rentals like Gabe did, like in 2012 and in the run up, and we did a little bit early on before we pivoted to multifamily and mobile home parks and commercial assets.
I was actually only buying small multifamily during that 09 through 13 time because it just made more sense. They penciled better.
Right. Okay. Sure. And I love multifamily. I love multiple units, higher cash flow, less risk, better lending. You're spreading expenses across multiple units. Single family houses, you got a vacancy or 100% vacant. We've talked about this. We love multifamily. Obviously, that's where we don't do anything in single family houses anymore. And I think that is a more speculative market. People might disagree, but I'm just saying, if someone wanted to be smart, if someone put a gun to my head and said, you need to invest in single family houses and that's it, I would really be looking to buying right now, because like to your point, Mitch, you can buy on a 30-year fixed mortgage but then you can refinance. I bought a duplex in 08 and ran it, and on the run up, I refinanced like 3 times on the way up, and it was painless. It was pretty easy. And so people that are waiting for interest rates to drop, I do think there's going to be a rush on the market. And I do agree with Gabe, like buy cash flow assets. That's the moat around your castle. And that allows you to hold these assets. And over time, in 10 years, 15 years, you're not telling me rents aren't going to be double or triple in a lot of markets, and these values aren't going to be double or triple. And you've been holding on to these assets, but you can hold on to them because you have cash flow. You're going to look like a genius, just like you look like a genius, Gabe. And we all look like geniuses. And we're not very smart. Especially Mitch. We're not very smart. Trust me.
Well, the last comment said the ball
guy's
guy,
not smart.
The ball guy was the smartest. So I do agree with that comment. Naturally feeds my ego a little bit. So, but what makes us look smart is you buy for cash flow. If my assets right now, tomorrow, they all right? They go down in value by 50%. It doesn't really matter because they all cash flow, and I'm not planning on selling them. And I don't need to sell them. I could hold them for another 30 years or whatever. It doesn't really matter. In fact, when you hold for cash flow, you have the opportunity to not only hold your current portfolio, but to take advantage of markets, like Gabe said, that crash and become cheaper. And so people get so weird about the real estate market because they're buying for speculation. But if your favorite car, it goes in half price tomorrow, you're going to rush to the dealership and buy it. But for some reason in real estate, everyone's like, don't buy now. It's scary when it's cheap. So like a crash would benefit all of us, especially cash flow investors, because we could get better deals, right? Better price, but better basis, and create better opportunities. And I think that a crash, a lot of the big investors, the BlackRocks, the bigger sort of like institutional guys, they like the crash, whether it's real estate or the equity market or whatever, because it's a transfer of wealth. We saw a big crash even in the last couple 6 months or so in the stock market. People got really, really scared about, I don't remember what it was tariffs or something. Anyway, the transfer of wealth that happened during that V of equities, we saw it so quickly. It happened within a couple months, was just like immense. It was massive. And I remember we were all talking about it. I went into, I bought SPY, the index, right? And made some really good money because it was a huge transfer. And the same thing happens in real estate. So if it drops out, go look for deals. If it doesn't, buy for cash flow. I mean, it's just, either way, buy for cash flow. So
I think it's always about buying for cash flow. I think back to, one of the early events I went to, first paid event I ever went to in 2012. And there were a lot of investors there and some, newbie investors, but also a lot of sophisticated investors, including Robert Kiyosaki, Ken McElroy, all their advisors, and some pretty big time investors. And, one thing I learned, not just from the folks on stage, but also the people that I met there at the event, is the ones that came out of 2008. Now, this was 2012. So this is only 4 years coming out of 2008. The ones that survived, the ones that didn't lose their shit, were ones that invested for cash flow. And I remember Ken McElroy talking about this. He goes, my properties are fine. Some of the values have gone down on paper, but I locked in good long-term debt on these and my cash flow stayed the same. Those that got their ass kicked in a small way or in a big way, because some of these investors were raising millions and millions of dollars on large deals. Those deals only worked if prices went up forever and if rents went up. Those that bought on fundamentals and cash flow first on the day that they bought the property, not that there wasn't upside, not that there wasn't upside in rents or other ways they could force appreciate, but they bought for cash flow first, were able to hold their assets. And those that were speculating, they bought hoping that rents went up and hoping that prices went up, they lost their shit. And I think, I don't think we're going to see anything like 2008 in 2026. I think nothing like that. But if we were to, I think it'll create one of the greatest buying opportunities. And anyone that has long-term buy and hold properties will be absolutely fine.
Not going to happen. No crash. There's also some data backing it. Is our intern now called Dumbass Dylan? Because Dumbass Dylan prepared some data for us here.
What? I'm like, did you look at his resume? My God, the guy is...
We got NAR projects medium home prices rising 4% in 2026.
I don't want our intern Dylan to be mistaken from our elite member Dylan.
No, different Dylan. No, that's Dylan. I'm talking about Dumbass Dylan, the intern. So also more data. Statista medium home prices hit 420,000 in 2026. Two hit 420,000 in 2026, up from 410 this year. ABM, AMRO in the Netherlands. Dylan, we're in the United States. Look around, buddy. 3% growth in 2026.
What are you talking about?
I'm just reading some data. All this data is saying that home prices are going up. Canada, CREA, Robobank, all this stuff. They say so. It's going up. I guess home prices are going up.
What is going on?
I don't know. I'm just looking at the data.
We don't care about that. We don't care about the Netherlands.
You need to fire your intern.
Exactly. Travis, it's a beautiful country to visit.
You need to fire
I care about the country, but anyway.
Okay, so we'll end at this. What can people do that are listening to this that are like, okay, I don't care if it crashes. I don't care if it softens. I don't care if prices go up. Like, I want to get in the game. I want to do what these guys are doing. I want to buy real estate that generates cash flow that replaces my day job income, that gives me freedom, geographical freedom, time freedom, all the things we talk about in the Zero to 100 Tribe. Like, what could someone do that's just like listening to this, like, yeah, guys, I hear cash flow. Okay, what next? In fact, we had a guy that commented in our last podcast that said, oh, buy cash flow real estate. Well, why don't you just give me a lottery ticket? Like that's not even possible. Like, it's this magical, mystical unicorn that we all ride every day that only us get to understand. Like, what do you do? How do you take advantage of cash flow real estate? If we're up, down, sideways?
That guy in the comments, I will tell you, like, that's just a mindset issue. That's just a self-fucking limiting belief. And I'll tell you why. Like, no, but it absolutely is, because throughout every generation,
mindset, for sure.
Every generation has said, like, oh, like, that's not possible for me. Oh, just a winning lottery ticket. Oh, if I just inherited
money. That's what your teacher said.
That's not the case. Like, if mindset is so important, you have to believe that it's possible for you first. That's the first thing. Like, you have to believe that it's possible for you. So if you believe real estate is your path to financial freedom and it's possible for you, we all started at zero. Most successful real estate investors I know started with little to nothing, except for a dream and a desire to be financially free, and believed that real estate was their path to get there. So first, unfuck your mindset. Second, educate yourself. Like, we live in a time where, like, podcasts, YouTube, like, it's free. And yeah, there's some dumb shits out there, and but there's a lot of good information out there too. And we have knowledge at our fingertips. And so I think you read the books, you listen to the podcasts, you watch the YouTube videos, like, you educate yourself, and then you have to surround yourself with a community, a tribe, people that are doing what it is that you want to do, people that are 1 step, 2 steps, 10 steps ahead of you. Like, that's going to be one of the biggest, I think, ways to compress timeframes and learn from other people, is to get in a community and around people that are already doing the thing that you want to do. I can't stress that piece enough. I mean, I've said it time and time again. Every single fucking deal, every deal I've ever done has come from a conversation or relationship. You got to have those conversations, tell people what you want to do, and build those relationships with people that will help you do it.
Yeah, I mean, I think if you don't have the right mind, we talk about this in our book, right? We're all taught it's wealth and success is for other people, not us. And if you believe in that narrative, you're going to look for excuses that support that narrative, which is cash flow real estate. Like, that doesn't exist. Mitch and we were sitting in this office, I remember, and we had dabbled in single family stuff, some duplexes here and there. We didn't really know what the hell we were doing. And none of it was generating sort of like freedom cash flow we talk about. And Mitch, actually, this was a pretty savvy, intelligent question, which surprises me coming from a guy like Mitch. He goes, how do we scale to hundreds, if not thousands of units, but how do we do it with freedom and cash flow? And instead of just going, well, that's not possible, must be nice that somebody gets to do that. I'm like, well, why don't we just dig in? And so Mitch and I, for 2 years, we were reading every book, we were listening to every podcast, we were trying to understand how this works. And yeah, we made some trips, we made some offers on apartment complexes, had no idea what we were doing, but we learned how to underwrite. We got around people that knew what they were doing. And yeah, now we have several hundred units, and we've reached, the point where the cash flow on the real estate covers all the expenses, and we can sit around and talk shit like this. So it is possible, but you got to take action, right?
But I think part of that is, like, Mitch asked a good question. Like, many people, it goes back to mindset. Many people go, that would be nice. Oh, they're so lucky. Right? Like, I wish I could. I wish. Like, Mitch just asked himself and you an intelligent question and tried to find the answer, and then broke down, hey, how would I buy 100 units? What would that look like? What would I need to do to buy 100 units?
It is a bitch ass mindset. You to your point, it's the answers to the questions you ask yourself.
Yeah, people underestimate the mind, and then how important, like, what you tell yourself will become reality.
I can also identify, though, because I've possessed the wrong mindset in multiple times in my life, and I'm always working on my mindset today. And I think my mindset's leveled up. But going back, I do think it's the questions you ask yourself, and allow yourself to ask big questions. So if your questions, or if your goal or whatever is to live in a beautiful home and have time freedom and a beautiful family, well, start asking yourself how that's possible. And then, like Gabe said, believe that. And the mind is really interesting. It starts to take in all the variables, the thousands of variables that we go through every single day, or inputs, and it starts filtering to start providing you that future. So, and then on top of that, getting around people that have done it. I mean, you can't help but to start speak like people who you're around, that you can't help for them to rub off on you, to like sort of download what they know, their perspective, their belief system. I already have, Gabe. So yeah, I think that's you. I think you cannot help that. So the network's important, the belief is important, and the questions you ask yourself are important.
For people that are hanging around somebody that says must be nice, must be like winning the lotto ticket, ditch that friend, because that is going to tank your mindset. But get around people that are either one step ahead of you, a few steps ahead of you, and always ask yourself, not I can't, but how can I? And yes, so in summary, don't think we're going to be seeing a market crash. Certainly don't think the market is crashing in 2025. And I think you can buy on solid fundamentals in any market. And people do it. You can buy, like Mitt, you can buy on double-digit interest rates. You can still buy cash flow real estate. You can hold it. And the more cash flow real estate you have, the more options you have in life, which leads to freedom.
I love that. And if you have questions about the Netherlands, shoot Travis a text message.
No, dumbass Dylan, because he put the data in my notes. So dumbass
he's not
Dylan gets
doing.
that question.
He's not doing well. I'll tell you that. The guy's about out the door. So I don't know if he's going to watch this video, but he's not doing well. All right.
Dumbass
We'll see you guys
Dylan.
in the next one.